Hello there, it's Francis here with yet another video. Now on today's video I am going to be showing you one of the ways in which I enter my trades using the trend line. Yes. The trend line obviously is widely used by traders across the globe, and it's something I have used for years, to good effect. Now this is obviously one of the series of videos that I have been doing, which I title the best trading strategies. I would encourage you to actually go and check out the other strategies and techniques that I use for trading. But like I say, on today's video we're going to be looking at how I enter trades using trend lines. Now obviously a good practice in trading is to learn to zoom in and out, as it were. Learn to zoom in and out, to be able to see a lot more on your chart and make the right decisions. Now with this particular trade, I'm not quite sure now. To be honest with you, I should have kept a record of how or what I had in mind when I was entering the trade. But in retrospect, if I had applied trend line, you would see in a minute that it would have worked just well. Basically when it comes to price action trading, it is often the case that even if you enter the trade initially without the use of trend line, when you now go back having entered the trade looking to apply your trend line, you'll find that it does work, and it would have worked quite well. Now that's another trade. I'll be coming to that as well. The current trade we're looking at now is the Euro CHF, the Euro Swiss franc. Not that that matters at all. You can basically use it across board with all currencies, all currency pairs. Now looking at this, for instance, if I was going to enter the trade, assuming I hadn't entered the trade and this bit had not occurred, what would I do? Let's just hide this bit anyway, because you can see from the bottom here, it's an uptrend. You can see from the bottom here it's an uptrend, and because I was expecting there to be a reversal, even if it was going to be some sort of mini reversal, what would I have done? I basically would have sought to apply the use of trend line. Let's just go like that. So you can see here it was going up from here, and then it got to the high. It came down here and then got there. I realized it was going to basically pull back, or well, as in go down. It was going to head south. So let's just do this. Let's basically just shade this out as though it has not occurred, as though this bit has not occurred. I would then go and get my trend line, even as you can find it there. And to draw a trend line, you basically want it to touch at least 2 points, 2 points, like from here to there. Now, if it touches a third, that's a bonus. I mean, some people would basically prefer 3 touches, so it should touch at least 2 points, of the at least 2 points as in candles. You can see here, let me zoom in a bit more. So you can see here, it is touching this candle, that candle, and obviously by default, it had to touch another candle. Like I said, let's assume this has not occurred. Let's assume this bit in blue, in the blue box, has not occurred. So because I was looking for it to go down, you never can tell in trading. But obviously, based on maybe a multi-time frame analysis looking at a higher time frame, let's just actually do that quickly. You can tell this is basically where we are. It got to a high here. That was the first high, then the next high, then obviously it got to this high, and I by my own analysis I realized, I figured out it was going to be going down. So let's go back to the 1 hour time frame. So what did I do? I would then come here and draw a trend line. Now somebody said the other day that the use of trend line is arbitrary, so it's subjective, so it really does not work. Well, that's him. It's fine for him to say that. Maybe he doesn't know how to use trend lines. I must say, there are lots of us who do use trend lines, and we do it quite well, and are able to generate some good profits. Now, let's just assume what he said is true, because there are obviously things you will look out for. There are times you will use trend lines and you would know that it's not going to work. Now let's assume somebody might ask, why did I pick it up from here? Why did I start drawing my trend line from here? Why didn't I draw it from here? Okay, let's draw it from there. Okay, let's draw it from here and see what would have happened. Actually, before we do that, I would just explain the strategy first, and then I'll come back and show you why I would not have drawn it anywhere else. Let's come back to this box. So we are basically boxing this area just to show or pretend as though this bit has not happened. So the price has gone up, it swung up high, and it's beginning to come down. So I now drew my trend line. What then happens? What am I waiting for? I'm waiting for a break of the trend line to the downside. I'm waiting for a break of the trend line to the downside and a possible retest of the breakout area. So let's zoom in now. So what happens? How would you trade this? I'll wait for the price to break, and then if I see a sign of it, continuing south, perhaps by using a wide-ranging candle, or what you might want to call a large candle, as we have here. It is large and it's emphatic, as it were. So you can see this candle is large and emphatic compared to the others. You can see the others have wicks, which basically means this particular candle came as low as this and then pulled back up. So the bears pushed it down and the bulls were able to take it back up, as opposed to this candle whereby it opened here and the bears pushed it all the way down and it basically closed lower than the previous candles, and there was little or no wick. So that was emphatic. That showed the resolve or the determination of the bears to take the price down. So what basically would have happened, as soon as this breaks this trend line, it breaks out of a trend line and it keeps on. I'll basically, obviously, you would have to wait for a couple of candles to see what who's gonna win the day, if it's the bulls or the bear or the bears, to see if it's gonna push back up. What obviously is good practice is to draw a horizontal line at that point where it broke. Let's just make that a bit larger. So you draw a horizontal line. As a matter of fact, let's make it a different color as well so it stands out. Let's use magenta. I tend to love magenta these days. I don't know why. so basically, sorry about that. So basically what I'll do is I would put a horizontal line at the point at which it broke out. Somebody might say let it be at the close of that candle, or even where exactly you have it's not, my line is not moving. You could place it there, you could place it spot on where it broke out, or you could place it at the bottom of that candle. I choose to put it there. So even as the candle broke out, you could then wait for an emphatic candle, like I say, and enter then. And that's exactly what I did. You can see when that candle closed, I entered. Most of my strategies, if not all of my strategies, basically require me to wait, for the close of the candle, because it's only when the candle closes that you know exactly what's happening. Because even as you have it here, this candle could have retraced all the way to the top, but it closed showing the resolve of the bears, and I entered even then. Now, another way, to trade that, because the way I entered now, you could say is an aggressive style of trading. A more conservative style or approach to this is to wait for it to break out. You place your horizontal line at the point of breakout and wait for the candle to keep on going south, as it were, and come back up even to test this line again before you enter. So you wait for the candle to break out, come all the way down, come back up, or pull back, as it were, to this line, and then if it continues down, if it bounces off that point at which it broke out, then obviously you will know that it is going to continue downward. So you wait for it to break down, to break out of the trend line, make its way down, and have some kind of pullback to that line. If it now begins to come back down, at that point you enter. But obviously, like I said, that would be a conservative way of trading. Now, what could happen then, obviously, is it might not, get to that line. It might not get back to that line at that point at which it entered. So I chose to go the aggressive way, and as soon as this emphatic candle closed, I entered and took the price, took it down. But obviously, as you have seen, it came down and went up, swung up, swung low again, went back up before making its way down. Now, obviously, the question is, why did I stay in the trade? You can see here, my stop loss is at the top there. My stop loss is at the top there. I could have chosen to place my stop loss above this candle, above this particular candle, one of the previous candle before the breakout candle, or even above this candle. Either way would have been good. Obviously, if you want, if you don't want to be kicked out of the trade, then you want to place it at the significant high. Otherwise, you could use the previous high, which is here. So anyway, that is basically how I would enter this trade using the trend line. Now, before I go, I'll quickly just show you something else. Because what we've done here is to trade, is to use the trend line, for taking, entering a sell position, taking a sell trade. What if I was looking to looking for a buy, thinking of, maybe buying at the point where, it started here. We'll come to that even shortly, but just to go back to what I was saying earlier on, why did I choose to, start my trend line from here? Why didn't I start from here? Let's just start from there and see what happens. So it touches this point, it touches another candle here. Let's delete that. So if I was waiting for, let's just move this out of, as a matter of fact, let's delete that as well. Why didn't I choose to enter from here? So if I'd drawn it out like that, touching this point and the second point, perhaps, what would have happened is the price would have carried on and come on all the way here. You can see it did not break it, so I would not have been able to enter a sell. It swung up and came down here. So you can see I would have had a much later entry. I would have been some pips late, as it were. But then, depending on how you want to take the trade, depending on when you want to enter, you could also choose to do that. So as you can see, even this was a good enough entry for me. This was a good enough entry for the trade, as it were. And it broke out here, came down, and I entered. Now, what if you were looking for a buy? Assume this bit has not happened. Let's go back there. I know this is we're now about 15 minutes into the video, but I believe it's going to be good value for you. Let's box this bit up as well. Ooh. Let's go there. So we're going to assume this bit has not happened. We're going to assume or pretend this bit has not happened. As a matter of fact, let's see how far we will go. So if you were looking to draw a trend line with this, it might be a bit of a tricky one. So what you might have to do, this is the 1 hour time frame. You might need to go to a lower time frame. Go to a lower time frame. Assuming you switched on your computer, you saw the chart on the 1 hour time frame, you're looking, to enter a buy. All this has not happened. You could drop 2 time frames lower. Go to the 15. Oops. Go to the 15. Oh, let's move this out of the way. Let's drag it. There we go. So you could decide, to go here and pick up your tool for drawing the trend line, and basically decide to pick it up from there. Now, the truth is, like they say, practice makes perfect. You would soon, become perfect at this once you start doing this often. You could decide to pick it up from here. It might appear as though it's an arbitrary point, but it's not. It's a point I have chosen to ensure that at least it touches 2 points. So I picked it up from there, touching this point, touching that point as well, and of course touching this point. So you can see this was like a swing high to a swing high. That's what I'm doing here. It wasn't a swing high to a swing low, but a swing high to a swing high. What do I mean swing high? Basically this is a swing high, this is a high. It swung low here, that's a swing low, swing high, swing low, swing high, swing low, and then swing high. Then if you consider the fact that this is actually a swing high and a swing low, so it's touching 2 swing highs. Or as a matter of fact, it's touching 3, 1, 2, 3 points, which is brilliant for me. So the price or the trade was, the market was in a downtrend here. So I was looking for a point where it was going to reverse. And obviously that meant that, I was going to enter when it broke out of the trend line. The trend line basically tells you or shows you, gives you an idea of the trend. Hence it's called trend line. It's intuitive, as it were. It's self-describing. So we draw that there. It didn't break out here. If it had broke out, I would have been looking to enter. Let's zoom in again. It kept swinging low and coming back to the trend line, bouncing off it until eventually it broke. No, it didn't quite break. It broke it, but it didn't move out of it. It didn't break out of it emphatically, like I would say. So it came back in. It now came out more emphatically. Let's zoom in again. It now came out more emphatically, and the following candle actually was also a bullish candle. So you could have chosen to enter here if you wanted to be aggressive about it. The only thing is it would have gone up and then pulled back to this point. So what I would have done to trade it in a conservative way, it's basically, to mark the point at which it broke out there. So you wait for it to carry on, and if it comes to, retest that point like it did here, it actually retested that line and, broke past it to the downside. Obviously, you don't want to take that yet until it shows some kind of rejection, as it were, or until it bounces off that line. So what obviously would happen is that you will wait for the price, to go past that line to the upside before entering that trade. And obviously that happened here. You would obviously, seek more confirmation. And by the time it gets here, or even a more emphatic candle like this, you could decide to enter and take the price up. Let's now zoom out a bit, or rather zoom in. So you can see, we are basically looking at, a buy and a sell trade here. So you would have obviously entered, say maybe here. Let me just mark that point at which you would have entered. Now, even though it broke out here initially, you've given yourself more confirmation. Yes, you lost 5 pips, but what's 5 pips if you're going to be getting how many pips? Let's see. If you're going to be getting over 40 pips or more. Well, actually a lot more. You can see from here, if you're going to be getting about 80 pips, was 5 pips. So you gave yourself more time and were able to actually, enter at this point, took it up. Yes, it came down, and that's it for that trade. So I do believe and hope you have gained much from this. Let's go back to our 1 hour time frame from where we started. So you can see here, when it broke out, you sought to enter when there was an emphatic move out, and you took the trade up. And of course, when it broke down or broke out of the trend line there, you waited for an emphatic candle to the downside and took the trade down. Anyway, that's the strategy for today. Trading using the best trading strategies, this time employing the use of trend lines. I do believe you've gained much. Find time to actually subscribe to my YouTube channel. Yes, I encourage you to subscribe to my YouTube channel. Let's take the numbers up. That's my YouTube channel. We currently have about 78 subscribers. Let's move it up to 100 and obviously 150 and into the thousands. And keep on liking my videos. This particular one you're watching now, ensure to like it. Yes, and I'll be glad you did. Okay, now until next video, God bless.